All right, so I had a dilemma. I said I was going to just shoot videos. I had to get some work done, and then the market keeps hitting these brand new lows and goes lower. So these are those new lows we were talking about, and what I want to talk about, I want to make this video to get my thoughts out there for you guys. It's clear, it gets asked a lot, and again, you know, we're hitting lows, and best part about all this, I don't care. I'm not playing anything. I'm just holding my puts. That, you know, you saw my videos. I've told you exactly what I was going to do, my way on it. I haven't told you my exact plays. I want, you know, I'm letting you know. You guys have seen me buy calls and puts, hedging everything, but that's what's going on here. But the problem here with this low is that if we hit like 252, we start to set another new low. But now for today, even though we're just starting to break down, this doesn't really matter yet because we still haven't hit the close of yesterday or the low of yesterday. So we're just hitting there now. If it breaks that, that's where it's going to get interesting. Sorry for the camera, and again, if you are new, got a couple videos today. It might get annoying, so we'll see. But I'm going to talk as this is going down. I'm going to pull up something else for you guys. Again, I just have my portfolio working for me now, which is pretty awesome. I can't wait to show you guys. I'm going to show you guys the plays after. They're all great. Even I've been saying that too from the last couple weeks. Believe me, once all the volatility settles down, we're going to have great learning lessons to go through these plays and see everything from holding them to averaging down to cutting. But man, this is great right now. But this is what I want to talk about, is what I'm expecting, and it's based in context to what's going on around the world. I'm going to show you guys every stock market, the main ones across the globe right now. And my thoughts are this, is that, like I said, we got that down Friday indicator. I've been seeing the volatility, seeing oil, Brexit, the trade deals, all that. I'm thinking that if we do not set a new low through, right now we're about to test it, if we do not test this new low and set a new lower range, then I believe we're going to rise up. And some people may say there's going to be a Christmas rally or a Santa Claus rally. I don't agree with that. And they say, well, that happens all the time in December. That's wrong. I'm going to show you guys, here's a chart. This is the S&P 500. And last time we saw nothing happen, it was the same situation, same sort of growth, but 2015. You saw, let me zoom in a little bit more. But pretty much it was the same thing. You know, it came up this starting December, started to come down. It had this little gap middle of December, same dates we're at here now, 17th, 18th. It was low on the 14th. It bounced, came down, it bounced a little, and this is exactly what I'm expecting. This is the type of Santa Claus rally, if there is going to be one, I'd expect. But it wasn't really a rally, and then you saw what happened. And this coincides exactly with oil. Oil did the same thing. That's why oil is one, and oil just broke 40. It's at $47 right now, I'm pretty sure. Oh my gosh, 46. That makes sense with everything. So it's down 8%. That's just a crazy move, and screw the oil puts. I didn't make as much money on those. That was a good play to show you guys. I hit that on the head, and the risk reward wasn't there for the options to, well, yeah, I made money, but I didn't like it. But what I'm showing you guys is that we might not see it, but I'm expecting we hit one more new low. If we test the new low, we might stay here. If not, we bottom out, bounce, and then this is what I'm saying, that the market is going to correct 2019, 2018. And now, before I get into the charts, I will say this. Maybe I'll face the camera for you guys so you understand this is coming from me. And what I'm trying to tell you right now is that when the yield curve inverts like it does, you see economic data how there are, you start to make assessments, and that's what I'm doing now. I fully could be wrong. There's people in the yield curve, again, it's that 6-month to 24-month window. This is that first stage I'm looking at, and again, I'm basing it off of political events. What I'm basing it off of, the yield curve, the government shutdown, which seems to be avoided, but then the government debt ceiling, and then the resume or the finalization of the trade talks or trade war being escalated, which I believe it is, and then we get the whole new cycle of rates, everything we're talking today, that's going to cool off and come back in. So what I'm trying to pretty much say is that if come January, if after this next coming weeks we don't hit a new low, we bottom or we keep going, I think there's going to be some relief. But come beginning of the year, if we don't have a sell-off, either beginning of January, it'll be late January. And then if that doesn't happen between late January, early February, then I'm expecting mid-March we have, again, come near these lows, or we don't even set new highs. That's what I'm looking for. And if it doesn't happen, it doesn't happen. So I'll leave that there, but now let's go through. This is what I wanted to show you. Every single market, let me zoom in here so it looks good for you. Here is Japan. This is 2018. This is why my first indicator, I say, watch them. They're more stable. They kind of look more like us, but since 2018, they're all down. They're approaching their lows that they hit in March, but pretty much if you see them break, you'll see what's going on. And what I'm trying to show you guys with all these countries is that what we're seeing right now is going on everywhere. It's just happening before everyone, and that's what happened in August when this flash crash occurred. You could have looked at all of these charts and saw it from a mile away, and a lot of people missed it because the US has been holding while all of these other markets have been trailing, and it's easiest for us to think we're doing better, but at one point with globalization, it is going to catch up. Here is the UK, here's the FTSE 100 again. Since 2018, they're below. They've already broke the new lows a few weeks ago or in November, so you see where they're at now, and again, they're about to hit even newer lows from breaking 2018. They've already wiped out 2018 gains. They're about to wipe out 2017 gains in 2017 in Europe. Germany, one of the most strongest economies, literally same expectations. They're about to give up their 2017 gains. 2 years of gains on the market. France, same situation. So this is where I'm trying to show you guys, Europe has been going to shit right now, and that's why the Brexit thing is so important. My next favorite one is Italy, which has been going one of the worst, and they're one to really watch for, but they've already broken below that 2017 point. They're hanging out there. That's where they're getting their volatility. Spain, same situation. Again, they've given back everything over the last couple years. Next, we have Australia, and this is where things start to get a little different. Australia, surprisingly, their economy should be worse, and I think it is, but their markets have been holding up. But I also don't think out of all the markets, they didn't have necessarily the biggest recovery. They just got back up to where they were in 2015 when all that growth started, and pretty much they're just continuing that leg. So seeing them do that is scary. Next is China. We know that situation. Literally down on 18, 17. They're lower than where they were in 15. Literally, China's setting 2014 lows. And again, go listen to the Warren Buffett song and everything I told you guys. This is where it all started, and this is where it started with China. And we're going to get back into this. I'm going to make another video on that. But India's up as well. But then these are the ones where they didn't really gain. India gained a lot, but they have unique stuff with their central bank. And then Russia. And you notice Russia is one of the, they're starting to give back, but they're up. But Russia and them, and then my favorite one, which I noticed today, which is a big cause of concern with oil, is Canada. So Canada has been dropping, and they're giving up that 18 lows. They're all passing 17, and this is what I'm trying to show you guys, and this is what I want you to see, is that things are selling off, and then there is this stuff, related to oil, Russia, and India, and seeing, the BRIC countries, even in relation to China and what's going on politically, those are all connected, and we're seeing stuff. But that's what I'm saying, is that I think my first dart I'm throwing at the correction for the stock market crash, I think we're looking at 2019 early or March, or that's going to be one of those signaling events, because if you go watch my other video, I compared this back to 2000 or 2007 on the yield curve. Both were different situations. I think we are at a, this isn't a tech bubble. This isn't a mortgage crisis. This is a globalization crisis. And I think that's when global trade and, the world we've gotten through the internet starts to contract a little bit. And so putting all of this into play, it's, this is the first, I think 2001's yield curve, when the market crashed, the market gave up 30% upon inversion and then finally dropped 60% within that year. But 2007, the yield curve inverted and the market went up. And that's what we could see here, is that if I'm wrong on this, we might have some I think we're just going to see crazy volatility in 29. But if I'm right on this, or if I'm wrong on this, it could bounce up. But then 2020, I'm going to hit it for sure. So I'm not going to go too hard on the puts. If I don't hit it this time, I know I'm going to get it in 2020. So I'm not too worried on that. But there's a lot to take out for. And obviously, I'm joking when I say that. You don't want to be overconfident. And that has destroyed a lot of people in this markets. And with everything going on, it's just a weird market. It's very interesting. And again, there's those new lows we were looking for. Yeah, right there. If it's going to come through on this candle, we'll see what happens. But It's going to be interesting, but that's where I'm taking a look at. I encourage you, if any of this is interested in you, you want more answers from me on this, go watch my videos. I'm talking legitimately since June, July, August, September, October, especially August, September. I started talking about a lot of this, and you could see it. I compared the crashes when Facebook first dropped. That was one of my first indicators when they dropped that 30%. So take a look at that stuff. I hope it helps you guys. Let me know your feedback. Subscribe if you're new. Give me some questions. I'd love to answer them, especially with what's going on. We had the stream. I think I'll have it tomorrow. Be prepared. If not, I love you all. Get your applications in. If we had that ran on stream, you know who it's for. If you don't know what it's about, don't even worry about it. Love you. Peace.